Welcome back to Properties Today. In this video we're going to talk about tax benefits for an investment property, or as some people call it, negative gearing. Negative gearing, by the way, only applies to having to contribute an amount of money to service the costs of owning an investment property. This was true for many years with high interest rates, and this was always the case. However, in most cases today, with low interest rates and increasing rental returns, that term should change to positive gearing, where there is no cost to run the investment property after tax benefits are taken into consideration. And in fact, the investment property is very likely to be cash flow positive, and having to contribute money to run the investment property becomes the exception. One of the big questions we're always asked is, what if the government changes the rules and there are no more tax benefits? This gets hyped in the media for whatever reason every time we have an election coming up. I can categorically tell you that as long as politicians from both sides of Parliament own investment property, this will not change. On the register of MPs' assets and interests, most will declare an investment property, and in some cases multiple investment properties. Some will be in their own names, their wives' names, company names, family trusts and self-managed super funds. When MPs go to Canberra, they get schooled up very early. Let's look at what happens in Canberra re MPs and investment properties. Parliament normally sits for 20 weeks of the year. That's 140 days. MPs, as of February this year, are paid $291 per day living away allowance. So when multiplied by 140, that comes to $40,740. That's a lot of living away money. Guess what a lot of them do with that money? Yes, that's right. They buy a property in Canberra to live in while they are attending Parliament. How much would it cost to service a loan of, say, $750,000 for a nice house in a nice suburb? Well, at a 3% interest only, it will only cost $22,500 per annum. That's $1,875 monthly, or just $61.64 a day to service a loan. The MP still has $18,250 left over. He will of course have some stamp duty and some conveyancing costs to pay, so even if he has spent the lot in the first year, he now has a nice investment set up and paid for by the Australian taxpayer. From year 2 onwards, it's all gravy with surplus funds each year. Once the MP leaves Parliament, it becomes an investment property with tax benefits. This is why tax benefits for investment properties will never be abolished, while those who make the laws are enjoying the benefits of those laws. If you want to know more, either send your details in the form below or give us a call on 1300 at the top of the page, and we will work with you one-on-one to provide the best possible outcomes for your circumstances. All financial information within this video should be used as a guide only and should not be solely relied upon. Thanks for watching.